Hello, this is Christian Takushi, your independent macroeconomist and geopolitical strategist, coming to you with the latest update from the geopolitical macroeconomic world. I am going to touch on um, three important topics today. First of all, Europe, and second, the United States dollar, and third, the issue of inflation and interest rates, and gold. Um, I will try to be as brief as possible, and I'm drawing from research we have shared with you in the past, so I hope that you've been following our podcast. Um, First of all, Europe. We are seeing now that Europe is feeling the backlash of its sanctions against Russia. As we warned in March this year, the sanctions that the EU imposed on Russia were not thought through. The sanctions were rushed, and it was very obvious to me that the EU Commission had not consulted experts, it had not consulted strategists about the second, third stage ramifications and consequences and side effects of the sanctions. These sanctions were not thought through and they would backlash. As I said already in March, these sanctions were likely to hurt Europe more than they would hurt Russia. And as it is, already as of the middle of July, we are seeing very clear signs that Berlin is now coming into a situation where it has to choose between supporting Ukraine in its war efforts or supporting the continuity of the Euro project and the survival of the EU, also the EU as a project. So Germany is now facing the possibility of not receiving Russian gas anymore. Something that German and EU leaders did not conceive, did not believe it was possible when they launched the massive sanctions against Russia. And this speaks really volumes about uh, the, the, the quality of the bureaucrats that are leading the EU Commission, because it's not the first time that they take rash decisions uh, that are not thought through and that actually become massive strategic errors. And I believe that the sanctions against Russia should have done in a slightly different way, and that those sanctions could have been taken with much more caution to protect the interests of Europe and the United States. As they are, those sanctions are beginning now to hurt European and US interests more than they're hurting Russia. Everyone is hurting now. Russia is hurting, Europe is hurting, but we can see very clearly that the EU leadership is in a much more desperate situation than Moscow is. And the reason is that our European leaders um, did not expect Russia to respond the way it did, and they did not expect the rest of the world to react so negatively against our sanctions. Um, to start with, our European leaders, when they declared a total economic war on Russia to punish it for its invasion of Ukraine, they weaponized, or they used as a weapon, the euro, the dollar, our banking system, and our payment system, the SWIFT. So we use our main assets as a weapon. Now, our leaders did not expect that Russia would dare to do the same on us and declare also an economic war on us. And if the Russians would do that, they would have to use gas because gas is their main asset. Well, our European leaders felt, and this is my this is my analysis, they thought that even if the Russians would dare to do so, Europe could threaten Russia with massive consequences, and Russia and Europe could actually solve the problem by by making a decree or issuing a decree to cap the price of gas, cap the price of oil, just as they have capped interest rates in Europe. Our European leaders, policymakers believe they could actually just decree um, their way out of the problem. Otherwise, they also thought that if that wouldn't work, they could actually force or convince other nations to help them. They could actually tell other nations not to buy any products from Russia. They could actually threaten other nations with sanctions if they would dare to do so. And they actually believed that they could decree their way out of the problem within the EU itself, telling every single nation what they ought to do. Just last week, the EU Commission told the different EU member states that they will have to do certain things, start saving, stop reducing consumption of gas by 15%, and countries that have more had to be share it with the other countries that don't have enough. And this is not working. This is not working. First of all, the EU has not been able to cap the price of oil or cap the price of gas. And the response of Spain and other countries in Southern Europe to the latest EU Commission suggestion or order has been not with us. You didn't consult with us when you do this. You cannot have our support for this. And Hungary has even announced that they will buy, and even increase the purchases of Russian energy. So all of this has put Berlin in a very dangerous position. As you know, the central bank of the EU, the ECB, has begun to raise interest rates. This situation is very dangerous. The rising inflation and now potentially rising interest rates in the EU puts the European financial system under massive stress. And here, in the past, Germany has been the one bailing out other nations. Germany has been the one assuming basically the cost or the responsibility for the whole system. But if Germany goes into a massive recession or a massive depression because of the lack of gas, Germany will not be able to do it like it did during the Greek crisis or the Euro crisis. Um, because of this simultaneous problem, Germany being under massive pressure and the European financial system and the euro being under massive pressure, Germany is now realizing that if they do not receive any more gas from Russia, Germany will not be in the strong position to rescue the euro and to rescue the financial system in the EU as they did in the past. So it's now putting Germany in a position or in a corner where it has to actually de facto decide between continuing to support the Ukrainian people and the war effort or supporting the continuity of the euro and the European Union. This is actually a remarkable development, and it's, of course, I don't think you will find this written in media as I'm sharing with you, because I think it will not be very well seen, and it would actually expose the EU to the disaster that it has cornered itself into. They they actually declare a total economic war on Russia in a time when Europe was very vulnerable. They could have done it differently. They could have done it differently, but they didn't. I think they were too overconfident. And finally, they are not helping Ukraine even, because Europe is now maneuvering itself in a very weak position. They had already 3 weeks ago, they started to water down their sanctions on Russia. They're already paddling down their sanctions on Russia, sending a clear signal of weakness versus Russia. The other issue that I want to comment with you today is the currency, the US dollar. And it's related to the first issue because the United States of America is also suffering from a backlash, from a backfire. The sanctions on the US sanctions on Russia are also beginning to hurt US interest. Not as much, the United States is not suffering as much as Europe is suffering, but it is beginning to suffer. And let me tell you what is happening. When the United States and Europe announced their massive sanctions, their economic warfare on Russia in March this year, they believed that they could tell the rest of the world what they should do. They told the rest of the world, you will not buy any Russian products, any Russian gas, or we will hurt you. And many nations um, have decided not to support us. They have decided to take care of their own interests. They don't necessarily agree with Russia or China, but they said enough is enough. The United States and Europe cannot talk to us in that tone. They cannot commandeer us around. They cannot threaten us around. They cannot push us around. The tone and the threats we spoke against them were taken as new colonialism. And the backlash has been absolutely terrible. There has been a terrible backlash in many nations' capital. The mood is very much the one of we have enough of the West. We have enough of the West. Sure, we don't agree with this war in Ukraine, but we have definitely enough of the West. And as a result, uh, major economies, massive economies out there. Big. I'm talking about big nations. I'm not talking about little countries like Bolivia, Ecuador, or sorry, relatively small countries like Bolivia. I'm not talking about countries like Ghana, Uganda. I'm not talking about little countries like Brunei. I'm talking about countries of the size of India, the size of Brazil, the size of Mexico, the size of Indonesia, Pakistan, Nigeria, the Philippines. I'm talking about countries like Malaysia. These are big nations, big economies. And I'm not mentioning them all, but all these countries that I've mentioned to you were very upset or very concerned by the way Western capitals called them and told them what to do and threatening them with actions if they would buy products from Russia, buy energy from Russia. As a result, most of the nations I just mentioned have begun already to build a platform for trading their goods and services with other countries without using the US dollar and our European banking system and payment system. They don't want to use the dollar, they don't want to use the SWIFT. And the euro is next. What I'm sharing with you is that as a result of uh, the way we talk to these countries in order to support our sanctions against Russia, as a result of our sanctions against Russia and the way we order and threaten these countries not to support Russia, these nations have begun a very interesting journey. This is a journey of reducing exposure to the West. So I'm recapping, ladies and gentlemen, I'm recapping. Nations like Malaysia, Singapore, the Philippines, Indonesia, basically all the Asians in the ASEAN group, the largest Southeast Asian nations. These are 11 countries, and half of them are massive, are big. These countries are big. We're talking about private consumption that is roughly 60% the size of China. I'm not talking about a small economy, a small bloc. This bloc is massive. I'm talking about an economic bloc, ASEAN, in Southeast Asia, that has a massive private economy, private consumption, I would say in the range of 55 to 60% the size of China. And of course, much younger population with with a lot of potential in the future. These countries have decided to trade with one another without using the US dollar and without using our payment system in the future. This is remarkable. It's going to take time. They have to write the software for this and implement a platform, stress test it. It's going to take time. They say they want to be doing this by the end of this year. It may take them a bit longer, but they want to start in November. And this is remarkable. Now, the BRICS, Brazil, Russia, India, and South Africa, they also want to start trading with one another without using the US dollar, without using the euro and our banking payment system. Now, these are not the only nations that are upset and angry at the West. We have countries like Mexico and Argentina, and even Nigeria and Pakistan that would like to trade as well in the future without using the US dollar and our SWIFT payment system. Ladies and gentlemen, um, what we have set in motion here will degrade the influence of the West around the world. This is going to take time. I don't know exactly when these nations will be able to start trading directly in a massive way without the US dollar or without using our European payment system or banking system. But I can assure you that this is going to hurt the US dollar. It's going to hurt the euro. It's going to hurt our influence, our Western influence around the world. And I wouldn't be surprised is if by the middle of this winter, I'm talking just in a couple of months' time, the dollar will have peaked and it could go into weakness. So what these big countries have begun to do will at one point begin to hurt the US dollar. Ladies and gentlemen, the euro will not be exempt from this. So I think that um, it is a pity that our leaders did not consult enough experts when they launched a package of sanctions against Russia, practically uh, launching a total economic war on Russia without thinking of what Russia could do, and especially what other countries would do. So here, our Western leaders, they really underestimated the way the rest of the world will react to our sanctions, but also to our tone and the way we dealt with them. And let's not sell this as saying Brazil and Mexico and Malaysia are supporting Russia. Let's be very careful with that. Some people may like to say so, but actually, these countries are not in love with Russia, not in love with China. They care about themselves. And they may not like Russia, but they surely don't like the way we talk to them in March and April. And I've talked to some officials in these countries. They are furious at the way we talk to them. And this has nothing to do with Russia, has nothing to do with China. This is the way we behave, the way we treat them. And they perceive this as a new colonialism. And they are very angry at the West. And this has sparked a kind of isolation of the West around the world. We have to be very careful about this. I hope it's not too late for us in the West to turn around this and to talk to these countries eye to eye with respect. We have to talk to them with respect. If we want something from them, we have to learn to explain our reasons. We have to ask them in a responsible, cordial, and friendly manner, showing respect if they could consider supporting us in our efforts against Russia. We cannot tell them, you're going to do this by so and so, and if you don't do, we're going to hurt you, we're going to threaten you. We cannot do that. Those countries are not poor little nations anymore. They may not be as advanced as we are, but those nations we're talking about are not poor nations anymore. These are massive economies. And for one, these nations are even doing better than we are. These nations are actually um, practicing a much better fiscal discipline than we have. Actually, these nations are in a much better economic and fiscal health than we are. 80%, 85% of the nations I've mentioned today that are angry at the West um, have a better fiscal position, a better economic position than we have. They have not been printing money. They have not been running horrible fiscal excesses like the G7 have. So we have to be very careful here when we talk to nations that are not poor anymore. They are massive, are big economies. They may not be as maybe as advanced as we are, but their economic um, let's say economic health is, I would say, even a little bit better than ours. Their fiscal health is even a little bit better than ours. They have the big problems, but not as big as the problems that we have in the West. The West is really sitting in a big geopolitical economic trap, as I'm saying for a number of years now. Now, the third point I want to touch is inflation and interest rates and gold. As you know, a lot of people are talking about inflation and I understand inflation is a huge problem out there. But we have to understand, ladies and gentlemen, that inflation for politicians, for economists, and bankers is not the same as for real people out there in Main Street. For, for economists and bankers and politicians, they don't care the price level that people have to pay. All they look at is annual inflation. So, if inflation this year would be, let's say, 15%, let's say 15%, horrible increase in prices, but next year inflation is only 5%, politicians, bankers, and economists would be celebrating it. I recap 15% inflation this year and only 5% inflation next year. That's a huge victory. They will declare victory over inflation. For them, it's a huge victory. For the real people, for housewives, for most people out there in the world, what I just described would be a terrible scenario because this year is already impoverishing them. This year is a disaster for them. And on top of that, next year prices will increase another 5%. That would be that will be actually a worsening of a disastrous situation of this year. But you see, investors and economists and financial markets are going to see that differently. And I think this is a huge gap in perception. What I'm saying to you is this: it's very likely that in 2023, inflation in key economies will be lower than this year. If we had 10% this year in average, maybe inflation in average next year might be only 4 or 5% in these countries. And that would actually lead or would allow central banks to start reducing interest rates. Yes. And I'm not saying that the inflation problem will be solved. Prices will continue increasing. What I'm saying is that even if prices continue to increase next year for financial markets, the situation in inflation would have already been kind of overcome because they would think they're thinking in terms of rate of change. And in terms of rate of change, inflation would have peaked in their eyes. You see? For financial markets, inflation would have peaked in the next 6 to 8 months. But for people, normal people in the street, inflation would be still rising. For them, it has not peaked. But that would allow central banks to start reducing interest rates. And that is something that I think you should be aware of. Although consumer prices may continue to increase over the next 1 or 2 years, interest rates may actually begin to decline in 2023. It's not a must, but it's something that we should not rule out. And if that would happen, ladies and gentlemen, if that would happen, that could actually be uh, very positive for gold, and it might actually reduce the pressure on cryptocurrencies, and it may actually reduce the pressure on risk assets like equities because the the declining interest rates is something that spooked equity markets, right? So although inflation may need a bit longer to come down, short-term interest rates may actually lead the way. And this may lead financial markets to start shifting into more risk-taking much earlier than people think. I'm not saying this is going to happen, this has to happen, but I think it's time to start thinking of that possibility. It's a scenario that is not unthinkable, it's actually possible. It's now in the realm of possibility and plausibility, and I think this is why we should be prepared to see uh, falling interest rates in the G7 economies despite still rising prices. And that would have, of course, some impact on gold and silver, very positive for gold, silver, to some extent also positive on cryptocurrencies and also other risk assets. Of course, equities and cryptocurrencies will not just rise so easily. The people will look at the path of inflation, and if that path is looking still pretty negative, they will still weigh on risk assets. But if the path of inflation will be seen as actually simply um, following also interest rates lower with a bit more time lag, but following lower as well, then risk assets that normally tend to lead and discount at least 6 months in advance will definitely begin to rise. So this is just something to keep in mind. Of course, there are other risks out there. The possible escalation of this war and the possible collapse of the financial system. These are things that cannot be ruled out. Neither can be ruled out that we enter a very severe recession. That cannot be ruled out. We've entered a period where our vulnerable economies are so vulnerable they can actually tip easily into into a destabilizing spiral. This is the nature and the essence of a vulnerable economy. Such economies can tip easily into inflation, hyperinflation, but also deflation. Yeah. As you know, I've been sharing for the last 12 years that the world is not just facing a problem of deflation, but also inflation. And I still see a very strong deflationary process in the world and a simultaneous inflationary process. And the two of them do not necessarily overlap. Okay, so that's it, ladies and gentlemen, for today. I hope that this was helpful. I'm going to take also a few days of vacation going forward, starting tomorrow. But I keep an eye on developments on the economic and geopolitical front. If nothing really serious happens, um, you will not be hearing from me the next 1 or 2 weeks. But I want to wish you all a very nice summer. Please enjoy the summer. If you live in the Northern Hemisphere, please enjoy the summer, enjoy your family. I wish you well-deserved vacations. And if you are in the Southern Hemisphere, I wish you also all the best. And this time it's a bit cold there. I think quite a few countries are a bit humid and cold at the moment. So I wish you also a good winter. Keep warm in the south. Thank you so much, ladies and gentlemen, for your faithful support and for your kind interest. Bye bye.